Well, of course, Simon, we continue to get a lot of questions about mortgages and actually a lot regarding private mortgages, wanting to understand, more about it, but also some of the pitfalls, some of the things to be concerned about. So we brought in just the person, of course, to help explain this in greater detail and really warn us about the pitfalls, what you should consider when you're thinking about a private mortgage, but also explaining what that is all about. So we have with us Michael Guglielmi, and he is the Partnership Development Manager as well as Financial Consultant, Mortgage Agent, and that is with Real Wealth Group. So boy, oh boy, you certainly know your stuff, and we're glad you're here.
Thank you for having me.
I'm just impressed she pronounced your name correctly, because it's a tough one. Yeah,
it's a tough one.
But I'm glad you're here too, because I want to address it maybe if we have time from both sides of the equation. Because when you say mortgage to most people, it's just okay. Well, I get a mortgage from the bank. I use the money to buy my house, but a lot of investors are now looking at private mortgages as an investment. But let's start from the other side. So if you're getting a private, and usually a private mortgage, in my experience, is typically a second mortgage in place on top of the first mortgage that's already in place. Is that correct?
Typically, it's a second mortgage. It could be a first or a second in place. Basically, it's the same as any other mortgage. It's still a legal agreement between two parties. They still have to repay. They still have to pay interest. And of course, the collateral is the actual borrower's real estate.
It's the house, yeah. So when we talk about private mortgage, we're now talking about a lender other than the big banks or the trust companies. It's an individual. It could be just a private individual has some money to lend, correct?
Absolutely.
All right. Well, let's talk about some of those pitfalls, things that we need to be concerned about when we're thinking about getting into the private, mortgage game.
First is a lender fee. So it's very typical to the lender to receive a bonus after financing the private mortgage. Now, typically, the interest rate should range around 2 to 4%. Anything higher than that as a lender fee should be justified by the lender, by the mortgage brokerage.
But let's put this into perspective. If I'm getting a second mortgage for, let's say, $50,000, then a 2% fee is $1,000. It's not a big deal. But if you start getting into large first mortgages, I guess it's relative to the size of the mortgage as well?
Correct. Well,
and the borrower's ability, I guess, as well, no?
Correct. So all things being equal, a second mortgage carries more risk to the lender than a first mortgage. So therefore, the lender fee should be a little bit higher to compensate the lender for the extra risk.
Now, Michael, is that something that's negotiable, though?
Oh, most definitely. Yeah, that involves the lender as well as the mortgage broker.
All right, let's talk about some other issues.
We also have the default charges. So when dealing with private mortgages, an NSF check, so a check written with insufficient funds, may happen. In the event that it does happen, there's a financial penalty that has to be imposed on the borrower. Very similar to that of a regular mortgage at a traditional bank. However, you just have to make sure you monitor it and review that the penalty is fair.
What's reasonable? What's fair?
A number in the area of $250 to $300 is accurate. Add tax on top of that.
It's not like the bank charges. If you ever bounce a check at the bank, they charge you $40, $50. Now with an institution, there's lots more admin required. They have to update their accounting, so it's reasonable.
Right.
Okay.
Now, what about renewals when it comes to private mortgages? Are they easy or are they cumbersome?
Well, typically the private mortgage is supposed to be set up for a short-term financing, but in the event that you have to renew and you have to keep it for longer than the term or renew the term, the automatic renewal fee is something that needs to be reviewed before going into the mortgage. Automatic renewal fee should range in and around the area of 2%, or some lenders don't even have it. So it's something, again, that's negotiable depending on the size of the mortgage, whether it's first mortgage or second mortgage.
Okay, so again, there's so many variables when we're talking about private funding. But some people, they know somebody. Hey, instead of going to the bank, I'm going to go to Uncle Bobby. Mm-hmm. Uncle Bobby, though, it should be done in writing. It should be a proper mortgage done because you know what? Things happen, even in families.
But I think when we're talking about the pitfalls, correct me if I'm wrong, this is not the case where, Uncle Bob is doing financing for his nephew and he goes to the lawyer, hey, draft up a simple mortgage document. I think this is the case when we talk about professional private lenders who are there to protect themselves. And there's nothing wrong with protecting yourselves and earning proper fees. And, when we're also going to talk about the flip side, where this could be an investment opportunity for people as well. But I think it's one of those things we can lump it into read the fine print.
But not just
know
yourself.
Exactly what you're dealing with.
You need to get professional help. So that's where, again, legal advice to make sure that you understand the fine print. It's always that fine print.
I've seen 5-10-page documents. Yeah, who can understand this stuff? Even the lawyers have to take their time and review.
Just like any type of investment, you always have to know your options. And more importantly, you have to know the risk. Mm-hmm. So what else do you have in terms of things to concern yourself risk-wise?
Well, for private mortgages, the thing is there is no formal normal marketplace where private mortgages are conducted. So that's why there's this range of fees that you have to watch out for, and the fine print can change from brokerage to brokerage.
Okay.
So that's where it comes in to bring the professional help in to help you review the paperwork to make sure that it's fair for both the lender and the borrower.
Now, the other option, Simon, is again, people can go to organizations that this is what they specialize in. So like Real Wealth Group, you specialize in helping people, both A, that want to offer first mortgages, and B, that want to,
Definitely.
borrow.
We're a brokerage right in the middle, so we're able to finance the deal, and we're able to accept funds for people that want to deploy in the private mortgage world.
You're the matchmaker, and you know what? You took the words out of my mouth, because you need to work with somebody that understands what's reasonable, what's fair. But I mean, we saw one case a few years ago where the lender was charging because they saw a tough situation. It was like a week before closing. They came in and saved the deal, but they charged a fee of 10%. And I thought that was just ridiculous. It was unreasonable. And we went back in and negotiated it, and we got it back down to a reasonable number. But you need to work with people that understand what's reasonable, because you can't be unreasonable, and you can't say no fees, because that's what you understand from conventional financing. But let's talk for a little bit about the other side. If you're an investor, a lot of people are moving towards second mortgages or even syndicated mortgages. So why are people going? What kind of rates can we expect as an investor?
Well, it all depends on the investor and what their risk appetite is. So if they're willing to go in second position, they can expect rates that are closer to, let's say, 10%. If you want to go in first position, you drop that down to something around 6 to 8%. So that, in addition to the cash flow, in addition to the security that the real estate has to offer.
Now, when you hear that, Simon, because I know you're all about protecting your clients, and that's just the realtor role, broker role. So when you hear 10%, is that something that you're comfortable with, or, does it make sense? Because, if you need cash and you're in that position where you need a little extra, you're going to have to pay for that. Or should there be room?
First of all, if it's a first mortgage, if you're going to a private lender, the reason you're going to a private lender to get a mortgage is because you can't go, for whatever reason, to a conventional lender.
And I think we need to preface by saying a lot of people business for self, that's become a real normal thing now.
I mean, definitely. There's been a great shift into the self-employed world.
Yeah.
And it's harder for the traditional lenders to qualify that type of income.
No, they're treated like second-class citizens, which honestly, when you think about how many people work for themselves or have a job and on top of that have their own businesses, it's insane. That needs to change.
Even us as realtors, we're considered
insane.
Self-employed, and even if you have a healthy income and pay your taxes.
Don't get me started, Giannini.
Well, it's going to change soon. That's another segment.
Yeah, okay.
But here's what we're seeing. We're seeing people go into their line of credit, borrow money at 3.5%, put the money in a secured investment, a second mortgage on another property, doing it the right way. We might have to do another complete segment just to talk about, how to do that the right way. But you can borrow money at 3.5% and collect 10, 12, 14.
Not bad.
I'm good with that.
Very good.
Using the bank's money to make money the way the banks make money.
It's a great way. It's called leverage. It is a beautiful thing. Now, you do this all the time. You help put people, we're going to call you the master matchmaker. I think that's a great, great description.
Romantic.
Yeah, I love it. I love it. Money matchmaker. But it's true. You're filling a need. There is a need out there, and these people are what we call qualified people that, should be able to go into a bank and get money, but they can't. So really, you're helping them to be able to fill that need. And more importantly, you're giving another option to us investors out there.
It's important for the client that's looking for money, the borrower, to have a mortgage broker that understands their personal situation. So let's say they want to exit quickly, or they want to exit before the end of the term. There may be a prepayment charge, there may be a discharge fee. Again, all things that a professional is to sit down with you and review.
Or you negotiate specific to their situation. Say, listen, we want these terms because we're going to be terminating early. The lender still needs to make a reasonable fee.
Absolutely.
You match the terms to what the client needs as much as possible.
All right, Michael. So for our listeners and viewers out there, they want to reach out to you and Real Wealth Group. How can they do so?
You can visit the website. That's realwealthgroup.ca. Or you can visit the Real Estate Talk Show website.
Attaboy.
Yeah.
Yeah. We've got a link right on the show. Yeah, you took the words out of my mouth, buddy.
Yeah, so there's 2 ways to get to me.
Yeah.
Michael, you're like a pro. I love you. Thank you for joining
My
us.
whole family's listening, Erin, so this is good.
See, Erin's just happy that there's another good-looking Italian guy.
I love my job. Thank you.